Good morning. It's Thursday, June 24th, and I'm Kenny Polcari, host of the party, Morning Market Commentary, everything you need to know to get your day started. So where am I today? It seems I've been all up and down the East Coast over the last week. So today I'm coming to you live from Cape Cod, Massachusetts. And you see, if you go right out through there, you're going to come right out into the Cape Cod Canal and then go straight through Woods Hole and out to Martha's Vineyard. And if you make a hard left, you're going to take another 2-hour ride. You're going to land in Nantucket Island, just off the coast of Massachusetts. Anyway, this is a childhood home. It's one of the places that's got so many memories. And so today I'm coming to you live from Cape Cod. So what do we need to know? So give me 1 second, take a look at that view behind me, and I'll be right back. Okay, I'm back. So what do we need to know? Well, Rafi Bostic, which is Atlanta's Fed president, comes out yesterday and says 2022 is in fact a real possibility, all while Powell is sticking to his 2023 plans, but 2022 is in play. Indexes are all-time highs while the VIX is plunging, suggesting there's too much complacency. Oil demand is strong as inventories are down and prices only going higher. And Bitcoin holding its neckline at 30,000, but I don't think it's over yet. And what are we having for dinner? We're going to try the rigatoni with Vidalia onions and all kinds of mushrooms. Look, stocks traded in a tight range on Wednesday, right? After investors had a chance to assess the most recent commentary coming out of the Fed, Jay Powell reiterating his stance that while there is some dissent in the ranks, the broader committee is going to remain patient before lifting rates despite signs of higher inflation, which he says is still transitory. All this, as Atlanta's Fed President Rafi Bostic comes out, and he is a voting member on the FOMC, he comes out and he follows in Jimmy B's footsteps, saying that the central bank could decide to slow its asset purchases in the next few months, and he made it clear that he is also in favor of rate hikes sometime in 2022, reiterating the Jimmy B story. So 2022 is absolutely on the table, leaving it very much in play. All of this, again, while Jay Powell tells us not to worry, rates are to remain at zero until at least mid-2023. And so the confusion remains alive and well, causing markets to just churn, right? By the end of the day, the Dow gave back about 71 points. The S&P lost only 4. The NASDAQ added 18 points, and the Russell added 7 points, right? So there's that churn, right? The market traded in a really tight range, and it's a churn. Eco data yesterday found that the market manufacturing PMI rose to 62.6, which is up over the last month, and that's a positive, right? But market services PMI slipped to 64.8. That's down from 70. And composite PMI came in at 63.9, down from 68.7. And while they're still in expansionary territory, the idea that the services and composite readings were a bit weaker also gave some pause to investors, right? And then we found out that new home sales fell by 5.9%, much bigger than the expected increase of plus 0.2%. So investors are remaining on the edge, a bit confused, and thus the churn, right? 10-year treasuries ended the day at 1.49%, kind of right where they've been. The VIX fell by 2%, ending the day at 1567, well into complacent territory, which I think is a warning flag, leaving stocks and investors vulnerable to any shock, right? The dollar index backed off just a bit, but it tested trendline support at 91.50 before bouncing and ending the day at 91.78. And oil, well, that just continues to climb. It hit another early morning high yesterday of 74.25 a barrel before ending the day up 0.6% at 73.46. 8 out of the 11 S&P sectors ended the day lower. Only energy, consumer discretionary, and financials edged higher, and they were only slightly higher. Growth continues to challenge the value trade with year-to-date performance now within a margin of error range, with the S&P Value ETF up 13.9%, while the S&P Growth ETF is up 12.6%. Growth has made a real comeback, right? It's all very exciting, especially as the Fed continues to allow the economy to run hot, a word I would like them to really define because, as history's shown, it may be a bad idea. I mean, I'm just saying. Look, Jay Powell did say on Tuesday that he does not see a 1970-style inflation to be part of the story going forward. And to remind all the millennial and Gen Zers out there, inflation in 1974 ran at 11% and 30-year rates topped out at 9.2% before rising to nearly 20% in June of 1982. But don't worry, it can't happen again because history never repeats itself. This morning, U.S. futures are well into positive territory. The Dow futures are up over 200 points. S&Ps are up 22. The NASDAQ's up 92, and the Russell's adding 19 points. Economic data today includes a laundry list of events. Retail inventory supposedly down 0.5%. Durable goods up 2.8%. Durable goods ex-transports up 0.7%. Capital goods orders up 0.6%. Capital goods shipped up 0.8%. Initial jobless claims of 380,000, while continuing claims remain elevated at 3.4 million, even as there are more than 9 million jobs out there available. So somebody's got to sit down and start explaining that phenomenon. We're also going to get the final revision of first quarter GDP, and that's expected to be the same, 6.4%. And while there's a lot of data, none of this is going to be a directional driver today at all, unless, of course, there's a huge miss on either side, none of which is expected to happen. So I expect the discussion to remain centered around Fed policy and the conflicting perspectives and commentary. And while tapering is an issue, and we know it's coming, they're driving the conversation towards the timing of a rate move. Are rates going up in 2022, or are they going up in mid-2023? Because I'm beginning to think that they're preparing us for a late 2022 move. I don't know, it's just my gut, nothing else. I was always in the camp, though, that zero rates through 2023 was a bit generous. And now we're beginning to see a little bit of a crack in the dam. So you got to sit tight and see what happens. The Fed's annual bank stress test results are due out today after the closing bell. And the stress test is where the Fed tests how the banks would fare in the event of another economic calamity. Once they do this, then they rank the banks, and then the ones that pass the test then announce how much of the capital that they've held in reserves can be released in the form of either increased dividends and stock repurchases. And this is going to be part of the earnings reports, which are due to start in about 2.5 weeks. And earnings are expected to be robust. We've been talking about that as well. I don't expect to hear any bank is going to fail. The Fed has done a massive support program offered during the past year in anticipation of what they thought was going to be another crisis due to pandemic, which really hasn't happened yet. So expect nothing but good news, and this should help the financials move higher. And as we know, the financials have really been an outperformer in this kind of recovery cyclical trade, right? This morning, European markets are up. Investors there are discounting the negative talk of an earlier rate increase by Rafi Bostic, and instead they're siding with Jay Powell, sticking with the assessment of a mid-2023 move. In the United Kingdom, investors are awaiting the latest announcement out of the Bank of England, where nothing is expected to change, right? Rates remain low, at record lows as they are here, and they're going to maintain their massive stimulus program. But like U.S. investors, they're going to read between the lines. They're going to look for any change in terminology that might suggest a tapering early next year. The German IFO Climate Index came in a little bit better than expected at 101.8, up from 100.6. So that's helping all the European markets across the board trade higher this morning. Oil. Oil is trading at $73.16 a barrel, which is up. And you want to know why? Because demand is strong and crude oil and gasoline inventories are down. On top of that, there's still some doubts that the U.S. is going to end the sanctions on Iran, preventing an increase in more supply coming out of Iran. So hold on. All I can say is we should probably expect to pay more at the pump by the 4th of July. Bitcoin this morning is trading at 33,200. Now, it breached its 30,000 neckline on Tuesday. And although it didn't collapse the way I thought it might, I don't think we're done yet, right? The death cross, which happened on the 19th, suggests that there's more downside to come. But expect all the paparazzi to attempt to defend that position like I think they did on Tuesday. The minute it dropped through 30, you saw Novogratz and you saw Yusko all come out telling you about how it's safe. Don't worry, don't get nervous, blah, 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 all that stuff. Ethereum's trading at $1,900 this morning, and Dogecoin has rallied just a tiny bit, trading at 23 cents. The S&P closed last night at 42.41 and remains just 14 points below its all-time high, while the NASDAQ remains 46 points below its all-time high. And futures actions this morning suggest that we're going to go right up and through both of those levels to establish new intraday highs. But the question is, will we establish new closing highs? And we won't know that until 4 o'clock tonight. It certainly feels like it, so sit tight. Look, we're now 6 months into the year. Performance so far has been wonderful, right? It's strong. All the indexes are up double digits. Transport's winning the year, up 19% year-to-date so far. Industrial's pulling up the rear at plus 10.6%. Everything else is within those bands. So it is time to rebalance, right? You know what you can do? You can text the word INVEST to 21,000 to get my digital business card. Give me a call. Send me a text message. Send me an email. Feel free to reach out. I'm always happy to talk about the markets and talk about a plan. You can also follow me on Twitter at Kenny Polcari, right? And as usual, as you can see, you can always find this on on my YouTube channel. So what are we having for dinner tonight? We're having this very easy dish. It's actually, this dish is even better the next day, right? It's rigatoni, which is a nice big short pasta made with a range of different mushrooms and Vidalia onions and olive oil and pecorino romano, shaved pecorino romano cheese. It's simple to make, but yet it's so good. It's soon to become certainly a family favorite, right? And you can tinker with it a little bit if you want. You can eliminate some of the mushrooms or add different ones. The basic ingredients, though, are going to include Vidalia onions, right? You want to slice them. So make 2 big Vidalia onions, slice them. You need portobello mushrooms, chanterelle mushrooms, button and oyster mushrooms, right? You need olive oil. You need garlic. You need shallots. You need fresh shredded pecorino romano cheese, and you need salt and pepper for sure, right? You can whip this up in about 45 minutes or so, and it's always better the next day. So make sure that you make extra and keep it around for lunch the next day. So bring a pot of salted water to a rolling boil like you always do. Then once it boils, turn it down to simmer. Just cover it. Leave it there ready to use when you need it. In a big saute pan, you want to combine 2 diced shallots, 3 chopped Vidalia onions, and 3, kind of crushed, sliced garlic cloves, olive oil, and a large saute pan, right? One that's going to be able to hold all that plus the pasta once you cook it, right? You want to stir to coat the onions and the garlic and turn the heat to medium-high, get it started, and then turn the heat down to simmer. Cover and cook it for about 25 minutes, stirring occasionally because you want the onions to get that nutty brown color, right? You want them almost caramelized. You don't want them to burn, right? At about 20 minutes in or 25 minutes in, you're going to add all the mushrooms and maybe a shot of another olive oil. Turn the heat up to medium, cook it, to get it started, and then turn the heat back down to simmer. Season it with salt and pepper. Toss every once in a while to make sure that they're cooking properly. Well, that's happening. Now add the pasta to the water and cook that for about 8, maybe 10 minutes. But be careful, you want it al dente, so make sure you check it at about 8 minutes. Strain it, always reserving a mug full of the pasta water. You always have to reserve the pasta water. Now you want to take the pasta, you want to add it to the saute pan. It's got the onions and the mushrooms in it. Stir it, coat it, mix it really well. If it looks like it's drying out a little bit, just add back a quarter of the cup of the pasta water to kind of reinvigorate it. Mix it up, and then take a handful or 2 of the shredded pecorino romano cheese. Put it right in the pasta. Toss it really well. Serve it immediately in warm bowls. Always have extra cheese on the table for your guests. It's a simple dish to make. You can make it, have it outside in the summertime. Have it out in the deck. Have it out in your backyard. It's a simple dish to make, and you can always enjoy this with. You can enjoy this with a white or very light red, maybe a Pinot Noir or maybe a Chianti. I wouldn't serve it with a heavy red wine because it just doesn't go, right? You could also have, certainly it's summertime, so it's rosé all day, so certainly you could have it with a rosé or certainly a chilled white. My preference is always Pinot Grigio Santa Margherita. In any event, it is a spectacular day here on Cape Cod. The sun is out. There's not a cloud in the sky. I expect it to be a beautiful weekend, and I'm here until Saturday. Until then, take good care, and I'll see you tomorrow.